This time last year, optimism surrounded the Africa Rising narrative, supported by a growing and young population, an expanding middle class, discoveries of oil and other minerals, political stability and infrastructure developments. The continent had survived the global economic meltdown, and for many the worst had passed. Few foresaw the challenges that would shake the continent to its core. Then Ebola struck. The hardest hit countries, including Liberia, Sierra Leone and Guinea, all forced to revise economic growth projections downwards, with Sierra Leone and Guinea facing an economic recession following a dip in business activity.
When Ebola struck, one of the first areas it hit was trade, because now you could not, it interfered with transport movement. As a result, it ceased making sense to invest.
What happened is, of course, extremely damaging within those countries, but the negative spillover effects into the rest of Africa, you've seen a sharp slump in tourism as far as South Africa and Kenya, a slowdown in air travel, economic activity has been badly impacted.
Another problem that severely affected the continent was the rise of terrorism. Nigeria in West Africa has for the better part of the year been entangled in fights with Boko Haram insurgents, while Kenya towards the east fought with al-Shabaab terrorists. Egypt, Libya, Morocco and Algeria are battling small divisions of the al-Qaeda terrorist group.
The frequency of incidents, the number of people dying, it has gone off the charts in 2014. It's taken a quantum leap. The various insurgencies, whether it's al-Shabaab or Boko Haram.
2014 also saw the fall of South Africa as Africa's biggest economy. This followed a rebasing exercise by Nigeria, which now has a gross domestic product of $509.9 billion. Sectors such as e-commerce, mobile phone and the film industry significantly contributed to growth.
Well, I think Nigeria is a classic story. All that excitement about the rebasing. And it's practically Shakespearean. I mean, we're less than 6 or 7 months down the road. The currency is getting trashed. The stock market has been sold off really aggressively. The central bank have hiked overnight rates to 30%. This is an economy under stress.
In terms of what really matters, say for government spending, it's tax revenues more than what the size of the economy is. If they for whatever reason were underestimating the size of the economy, the tax revenues are the tax revenues. That's what will be allocated towards spending or investment.
While countries like Ghana, Zambia and Mali sought bailout programs to get their books in order, Egypt scored a first after successfully financing the initial phase of the Suez Canal expansion from internal sources, impressing the International Monetary Fund that has given the country a clean bill of health. Another shock for the continent was to come in the form of tumbling oil prices. While this would signal good tidings for non-oil export-dependent economies, Nigeria and Angola have paid dearly for their overdependence on the black gold. Prices dropped to below $70 a barrel.
For the African consumer, of which Kenya is currently a consumer economy, this is going to be a stimulus. It's going to be a democratic stimulus because we all need oil to some degree in our daily lifestyle.
Though it was a tough year for Africa, economists believe that intra-Africa trade, a dip in oil prices and diversification of energy sources will be the major catalyst for growth in 2015. Clementine Logan, CCTV.